Hey, Dan Passarelli here. Happy Monday. The word of today is uncertainty. There's a lot of uncertainty lately. Today, the S&P 500 closed down 0.2%, basically flat. The SPY ETF, the most commonly traded ETF there is, closed at 635.92. But what I find more interesting about the chart, there's a couple of things I find interesting about the chart. Let's start down here at the bottom. We see the volume today. Well, it was one of the lowest volume days that we've seen over the past 6 months. Not a lot of trading. And it wasn't too much better for Friday or Wednesday, for that matter. There's just not a lot of decisiveness. And we've seen that play out during the days. In fact, if we go to the 1 minute chart today, just look at this right here. We opened, drifted down, went up, went down, and we've been seeing quite a bit of that lately. The market's just not been able to find its direction. I mean, sure, we're still in this uptrend, but to me it feels different right now. Now, the price action today kind of got, well, I won't say blamed on, but what got the credit for it is the potential talks between Trump and Russia and Ukraine. Mainly, well, from an economic standpoint, because we care about oil and economic outcomes. I mean, don't get me wrong, people care about the important things there too, but as traders and investors, that's what would be driving the market. But we didn't really make any decisions there, maybe because we're not sure if there will be any decisions made there. We're also not sure about inflation. We've got CPI coming out tomorrow and PPI coming out on Thursday, and that could give us a little bit of direction, but I think it would have to be pretty far out of line one way or the other to really be a big deal. I think if we're within 0.1% of expectations either way, we probably don't move too much. Now, a big thing we have uncertainty about is what result we'll get from tariffs. There's a lot of talk and speculation that it could cause inflation. And it's pretty logical that it could. But let's face it, we don't really know for sure until that happens. And we'll know soon enough. We'll know for sure by next earnings season. And maybe even a little bit sooner if, well, frankly, if we just see prices going up at the store. We also have a lot of uncertainty about recession. Okay, the history, the Fed raised rates to cool the economy, which should cool inflation, which it did to a large degree. And now there's the question, did the Fed wait too long? Is the economy cooling too much? Could that lead to a recession? We're not really there yet. We might not get there. We don't know. Now we talk about inflation, we talk about recession. Could this end up being stagflation? That's kind of a worst case scenario. I mean, that is a worst case scenario, but there'll be quite a bit of time that needs to pass and a lot of data we need to see before we can talk about that. What I find kind of interesting too is the VIX. The VIX is, well, the fear gauge is what our friends over at Dow Jones Company have coined it. On a day like today where we're pretty much flat and there's a red candle, VIX was actually up. That's not really uncommon for Mondays, but that could represent a little bit of uncertainty. But even volatility is not that certain. Volatility tends to go up more when the market's down. It's less a measure of uncertainty than it is a measure of fear. And in a market with this much unknowns, to be sitting at 1625, I mean, that's a pretty plain old wait and see sort of thing. On the other hand, while the number is not really that high, 1625, implied volatility is pretty significantly over historical volatility. Now, looking at these volatility charts, they can be a little bit inflated. So what I like to do is make note of the historical volatility, which is about 10, and then just go into the option chains, and we see that it's trading, 16, 15, 15, 14 handle right here. Go out to 7 days, maybe down to the 12 handle. So there is that uncertainty somewhat factored into the VIX, but just not massively. So I do stand by that what we're seeing here is a lot of unknowns. And when we have this sort of unknown, this low volume, this overpriced but not high VIX, this just steady meandering, boring climb higher, we wait for that inflection point. We wait for that turning point. And that turning point is likely to come with data. It's going to come with a catalyst. Now, some of that could be technical as well. If we make new highs, we could meander a little bit higher. If we bounce a little bit lower, well, we could meander just a little bit lower. But if we start crossing through some moving averages and we pick up some steam while volume increases, going up or down, that could indicate the changeover. If we see much higher or much lower inflation, much higher or much lower in the jobs front, that would be a catalyst. If we see any major political changes in the world, that could be a thing. And or once we start getting data on the tariffs, and that's going to be the big one, but that's a good month out, then we're going to see the trend make a shift. I hope that helps. This is Dan Passarelli, Trade Smart.